Hey, good afternoon, everybody. And this is going to be the watch list for Monday, April 22nd. And I'm going to do something a little bit different this week than what I've done in the past. And I'm going to use some software automation to help me show exactly where the buyers and the sellers are sitting from a historical perspective based upon supply and demand. Now, what you could do is you can manually chart this out on every time frame. So you would typically start at the monthly, then go down to the weekly, the daily, the 4-hour, so on and so forth, until you got to a 5-minute and 1-minute chart, which is where we take our trades. But I'm going to keep everything at a high level on the daily and the 1 hour and kind of show you where the buyers are sitting, and those would be your levels of support. Now, if you break through those support levels, you're going down to the next level, okay? So the market has been exceptionally weak for the past several weeks. Last week's watch list was pure money, so hopefully you were able to capitalize and bank on that. But as always, we're going to start out with the two indexes, and then I'm just purely going to stick with the tech stocks. Reason being is tech is what is leading the market lower. It is also what will cause more fear that will drag down SPY with it. So remember, when you're trading, you want to be watching ES and NQ, which are the futures markets that will drive SPY and QQQ. But we're going to start with the overall SPY. You can see on the daily, we are below the 9 and the 21. They have actually crossed as of early last week, looks like on Monday, and volume has picked up this past Friday. Nobody wants to go long over the weekend with the war between Israel and Iran. That is a huge concern of the markets. You'll see that we have the longer 200 SMA down here that will also possibly act as a bounce area. But do note, we're at 495, and this is a long way off at 472. So, do I think we're going to drop all the way down this low? You never know, but let's take a look at it with the help of some software. So, what I'm going to do is I'm just going to put in the overlay that will show where the pivots would be for overall support in the market. Right now, we're trading at 495, so I will say that if SPY drops below this 490 level, we are probably going down to 485. There is literally no support on the daily time frame that's going to hold this market up from dropping lower. Now, let's take a look at this on a 1-hour time frame. You'll note that I still have my 490 support level, and we do have some overall buyers down here, but the time frames they're on are relatively weak. We've already blown through the 2-hour support level. We're now at a 45-minute, a 30-minute, another 30-minute, and a 30-minute. 30-minute time levels are nowhere near as strong as the hourly, 4-hour, or daily. So if we continue to sell off, I think that our price will definitely be coming down into this 390 time frame from a price perspective, and then we are going to head lower. Am I looking for a bounce? No, not necessarily. You'll also note that we do have a small gap down here on the daily as well. Gaps will fill 80 to 90% of the time. So I'm going to watch possibly for a bit of a bounce. And then depending upon the overall market sentiment and how earnings come out, because there's a tremendous amount of earnings this week, to see are we able to hold support here and push higher. But do note that the sellers are sitting here ready to take advantage of any pop, okay? The banks announced last week, and it was awful across the board. It started with JP Morgan Chase, heavy sell-off, 7%. The regional banks announced earnings, some of them awful. Again, I mean, they're beating earnings, they're beating estimates, but the problem is that the FOMC is basically saying that we don't see any rate cuts. Well, maybe one, but possibly none, and then there's always a hint that they might raise rates again. So the banks are struggling with two facts. One, deposit costs are way too darn high that is eating into all their profitability. So as the market is eating into the profitability with these deposit costs, they are also not lending. Why are they not lending? Because they know that the FOMC wants to slow down the economy. Slower economy means higher unemployment. Higher unemployment means more delinquencies. More credits will go bad. We all know that consumer credit is at the highest level in history at over $1 trillion, and it's not getting any better. I believe JP Morgan Chase's Jamie Dimon just announced that over 30 to 40% of people in this country don't even have $400 in savings for an emergency. So, mind you, the banks are not going to want to lend long, even though interest rates are in the 7 and 8% on loans. There is no sense in making a loan if you're not going to get your money back. So for that reason, I think if we break this 490 level, which is psychological, then we are definitely heading down to the 485. Let's go ahead and take a look at the QQQ. And the sell-off has been fairly robust. We're going to let the indicator go ahead and fill in and see where we're at. You'll note here on the daily, we didn't even get down to where the buyers are at, and it started to push up marginally higher, okay? Note we also have a gap right here from 409 down to about 407. As I've shared before, gaps will fill 80 to 90% of the time. So what will happen with a stock when you start to approach the gap is it will use the top of the gap to possibly bounce off of, and then it will eventually start to head lower to fill that gap. Now, mind you, where do we have support? Our support level on this is at 410. I mean, we closed at 413.90, and so we got a ways down to 410 till the buyers step in. So am I going to go long on a bounce? Personally, I'm not. I'd wait till at least we got to the support level. Now, the problem I have is the support level is not very strong. They're 30 and 45-minute supports. So you need to get into a heavier zone of buyers where you have layers and layers of multiple time frames. So we got a 4-hour, a 30-minute, a 30-minute, another 4-hour, another 30-minute, a 2-hour, a 30-minute, and a 45-minute. I know it's hard to see, but right now there is no reason to step in front of this freight train and think that it's going to go higher. And if it does pop, I'd be shorting it to go lower, okay? So that's the SPY and the Qs. Again, we got a gap. We start to break through these, and we are, heading down below 400. And then we are going to the 390s. We have another gap way down here in the 383 to 378 range. Is that going to happen overnight? No. But again, if you get a tremendous amount of volatility with Iran and Israel going to war, this precipitous sell-off is going to continue. Let's stick with the tech names and let's look at some of the others. I've been covering Apple for you guys for literally weeks now. And look at this. I haven't even removed my lines. And I said, if we break this green support zone here, we are heading lower. And what happened? We broke it, right? At that 167. And then we broke my next level of support at 165.67. And we broke the next level at 164.31. Now, we did bounce off of it, so it'll be interesting to see what happens. But do note that we closed lower than this prior pivot right here. So I don't have a lot of confidence that the market in Apple is going to be bouncing significantly higher. If it does, they're probably going to sell into it to push it down lower to the next support level of 162.80. And then I think we're heading to 160. There's been no good news on Apple, from antitrust lawsuits to phone deliveries in China. They've also had to take off several apps from the App Store. So, just again, not a great news story for one of the world's biggest tech companies. Let's go ahead and we're going to take a look at Meta. Again, huge sell-off, made another all-time high several days ago. Look at this one, though. We have a gap. If we know that gaps fill literally 80 to 90% of the time, as I said on the last screen, that we'll use the top of the gap to bounce. We did just that. I would wait for a bounce possibly on Meta and then seeing, do we come down lower? So let's take a look at this on a 1 hour time frame, see what it's going to look like. You can see we don't really have any support on the 1 hour till we get to 473, and then we don't get into the heavy buyers until 469, 463. So again, I would love to watch this push back up into overall supply up here at the 480 level and then head lower. But right now, you are between zones. So this is called gambling, right? We don't have any buyers. We don't have any sellers. We're sitting in the middle. So this is where patience comes into play. If you're going to play a bounce, you're going to wait for it to get down here to a very solid buy zone and where you've had prior pivots. And we could blow through these. And if we do, then we are going to the next gap fill. Where is the next gap fill on this? Look at how wide this is. This was off of earnings. Same exact thing, guys. The 200 SMA is going to approach the bottom of the gap. The 9 has just about started to cross the 21, so we are headed lower. First gap that we'll fill will be here, down to about 469. Top of the next gap where we could get a bounce. And then if this gap fill comes into play, we're headed down to 400, which is about another 15% drop, which would be significant. Is it possible? Absolutely. Is it probable? We'll see. Next one I want to take a look at is going to be Amazon. And we're going to, again, start on the daily. Nice precipitative sell-off. We do have a big gap below. Again, off of earnings announcement back here in February. You'll see the gap. We do have quite a bit of buyers to push this higher. Really good support right around here at the 171. So what I would want to do is I would want to see, are we able to get below this 171 and then start to get lower into, again, some of the lower time frames. Now, mind you, there is yet again another gap here. Let me just zoom in on that so you can see. It's from 171 to 170. And then we got some support on the 1 day. A daily zone of buyers will be strong. We break through that, the 2 hour, the 30-minute ain't going to hold, and then you're going to start to go for these overlapping gap fills on different time frames, okay? So I'm definitely conscientious that could we go higher for a bounce in the market? Yeah, but what's the catalyst? The only catalyst that I can really think of is really, really strong earnings and companies giving forward guidance. Let's look at the next one. NVDA, this had a huge sell-off on Friday, 10%. And it is the chips that are taking down a lot of the momentum in the Qs. I believe the chips have about a 20% weighting, so you're going to want to watch NVIDIA, AMD, Intel, all of those. Now, mind you, yet again, huge gap to be filled. Now, look at this on the daily. There is no support. The support for this is all the way down here at 677 to 664. I mean, there's nothing. There's no buyers. Now, if we go to the 1 hour, you will see that there will be some buyers that will be picking this up. But when the stock starts to drop literally 10% in a day, people get scared. So what I would watch for this one is most likely going to be pushing down to the bottom of the zone at 742. And then if we break this, the 45-minute and the 45-minute here are not going to hold this up. We're definitely going to push down to this 679, 680 time frame. That would be one that I would get short. This is a stronger daily time frame, so you should get a good bounce here. But then again, if not, and we start to head lower, we are going to get into that gap fill, and then we are heading, dramatically lower. So keep an eye on this one. Note where the stock is at today, we are now at the same place the stock was at back in February. It had a monster run. The thing is up insane percentages, and the market is now starting to give it back. And then the last one that I want to look at is going to be Tesla. A ton of negative news on this one again. A lot with Elon's comp package. He's threatened to walk from Tesla, might stay, might not stay. And then if he leaves, what happens to the brand? Same exact thing. No support on the daily. I mean, there's no buyers until we get all the way down here to 131 and 126. We got a gap above, another gap above. So no different than a stock can gap on the way up, it can gap on the way down. And that's what's happening here. So that's just showing you heavy sellers through the overnight hours. They're not even waiting for the market to open. They're just automatically gapping this thing down. Let's take a look at it on the 1 hour. The 1 hour, we do have some pretty solid support, but again, multiple time frames, 45 minute, 30 minute, 1 hour, 2 hour, 45 minute, 2 hour, 3 hour, 1 hour. Can we get through this? We definitely can, especially if volatility picks up and people start to get scared thinking that this thing is dropping toward 100, which is where I think it's ultimately going. How long will it take to get there? We'll find out as to the strength of the buyers here if more step in. But you can see there's no reason to go long on this from my perspective. So with that, that's just kind of what I'm looking for as we close out the final month of April. I would definitely say watch the VIX and then also watch the dollar, the DXY, the Dixie. So as the dollar goes higher, it makes it much more expensive for all of the United States companies who are exporters to sell goods and services around the world. Why? Because their buying power has dramatically increased. So keep an eye on the VIX. If it stays north of 20, we're heading lower. If it starts to come in a little, you could get a bounce. Watch the Dixie. And then also make sure you're looking at marketwatch.com for the daily news. And don't get trapped in a trade right before news drops. Okay? With that, I hope you have a great week. Shoot me any questions. Let me know what you're thinking. And hopefully this is just a different perspective as to how you can use technology to also make an informed decision about how to place your trades. With that, have a really good week, and I will talk to you all soon. Take care.